Welcome to this explainer. If you follow global finance even a little bit, you already know India's payment ecosystem is growing at just an unprecedented rate. But today, we're not just going to look at the surface level success. We're going to zoom in and deconstruct the hidden mechanics, the literal engine powering this incredible financial transformation. And then we'll zoom back out to reveal a completely counterintuitive truth about where this is all heading. We're going to find out exactly where the real untapped value lies for the next decade of banking. Okay, let's kick things off with a massive, honestly gravity-defying number, 182.6 billion. That is the projected volume of consumer digital transactions in India for the 2025 to 2026 financial year alone. To put that into perspective, digital payments are swallowing up a whopping 65% of the total consumer economy. We are talking about millions of swipes, taps, and clicks happening every single hour of every single day. It is a monumental shift. Over 1 billion people are moving from physical wallets to a completely digital existence, and it's happening almost overnight. But here is where it gets really interesting. This digital revolution, it is absolutely not uniform. It's actually starkly divided by geography. Down in the southern and western states, the digital economy is booming, capturing averages of around 60 to nearly 68% of transactions. But as we shift our focus toward the eastern and some northern states, we uncover a totally different story. There is a massive, deeply entrenched dependence on physical cash. So we aren't just looking at one unified digital wave across the country. It's a highly concentrated surge that leaves entire regions operating on a completely different financial frequency. The contrasts here are literally extreme. In highly digitized hubs like Chandigarh, Delhi, and Kerala, digital transactions are dominating, making up roughly 80% of all consumer spending. But then you look at cash-heavy states like Bihar, Jharkhand, and Uttar Pradesh, where well over 60% of daily transactions are still completely paper-based. It's honestly like looking at two completely different economic operating systems functioning within the exact same borders. One is moving at the speed of light, while the other is still physically handing over notes for almost everything. And understanding this split is absolutely crucial for predicting what comes next. Now, before we talk about the incredible future potential hiding in those cash-heavy states, we kind of have to stop and ask a critical, mechanical question. How do those highly digital states manage this immense volume of daily financial traffic? When you're processing upwards of 180 billion transactions a year, how on earth does the system not buckle under its own weight? How does every single rupee get to exactly where it needs to go in the blink of an eye without getting lost in the digital ether? Well, the answer lies in something called the payment switch. If you're building or analyzing payment ecosystems, understanding this piece of tech is absolutely essential. Think of the payment switch as the ultimate air traffic controller for money. It is the invisible backbone that connects merchants, banks, and networks. So whenever you swipe a card or scan a QR code, this switch ensures your specific request gets routed to the correct bank, gets validated, and gets approved, literally in mere milliseconds. It's this unsung hero working tirelessly behind the scenes, keeping the whole digital economy flowing without a single collision. So how does a transaction actually survive this high-speed journey? Phase 1 is all about initiation and routing. It starts at an input channel, like an ATM or mobile app. The request hits the input interface, which instantly translates it into a standard format like ISO 8583. Think of this as a universal translator, making sure that every single bank, no matter what their internal tech looks like, can seamlessly understand the request. Next, it slams into the validation module, which acts like a digital bouncer running crucial fraud and limit checks. Finally, the routing engine dynamically decides exactly which bank or network, like Visa, MasterCard, or RuPay, actually needs to process it. The big takeaway from these early phases is absolute pinpoint precision. During these split-second hops, the system is performing relentless security and formatting checks. Because think about it, without the input interface ensuring perfect formatting, or the validation module running rapid fraud detection, the entire national network would be incredibly vulnerable to massive errors and cyber attacks. This microsecond filtering is what keeps billions of rupees secure before a destination bank is even contacted. It is a masterpiece of rapid-fire defense, and it all happens in a fraction of a heartbeat. And then, seamlessly, we move right into Phase 2. The routing engine sends the packet to the authorization module, which pings your specific bank to confirm your balance, your PIN, and your card's validity. The second the bank approves, the response handler instantly shoots that yes right back to the merchant's screen. But here's the crucial part. The journey actually ends at settlement. While the app on your phone shows the transaction instantly, settlement is where the actual money is transferred between the banks at the end of the day. It's the ultimate reconciliation, ensuring the entire financial ecosystem balances out perfectly. It basically turns those instant digital promises into hard capital. All right, zooming back out to the macro level now. Managing these 182 billion transactions, that's really just the baseline. It's the engine for sure, but it isn't the destination. Because every single 1% shift from paper cash to digital triggers massive compounding economic opportunities. We aren't just moving money faster here, we are literally creating entirely new ecosystems. Every new digital user brings a wave of behavioral data and capital straight into the formal banking system, paving the way for a huge expansion in deposits, lending, and merchant services. Digitization takes invisible cash and turns it into formal deployable capital. And this brings us to a wonderfully counterintuitive reality about India's economy. The biggest future banking opportunities aren't actually in those highly digitized, tech-forward states like Chandigarh or Kerala. Because adoption there is already so incredibly high, their ceiling for explosive new growth is somewhat limited. Instead, the real gold rush, the next massive banking frontier, is firmly seated in those cash-intensive markets. Places like Bihar, Jharkhand, and Uttar Pradesh hold unimaginable untapped potential precisely because they haven't fully transitioned yet. The runway for growth in those regions is simply staggering. For banks and policymakers, pushing digital adoption into these cash-heavy frontiers unlocks exponential value. It drives foundational financial inclusion, pulling millions of people into the formal economy for the very first time. But the real superpower here is credit access. When cash goes digital, invisible economic activity suddenly becomes a verifiable data trail. And that data, it allows banks to understand deep consumption habits, which enables them to safely lend to households and small businesses that were previously completely shut out of the credit market just because they didn't have a formal financial history. It really all boils down to one defining principle. Where cash dominates today, banking growth will emerge tomorrow. This reality completely redefines where the next decade of economic expansion is actually going to originate. The incredible digital infrastructure, that robust payment switch we broke down earlier, has been fully built, rigorously stress-tested, and perfected by the early adopters in the tech-forward states. And now it stands completely ready to absorb the massive impending wave of new users from the rest of the country. So I want to leave you with this final thought to ponder. The invisible architecture we explored today is a marvel, processing hundreds of billions of transactions in mere milliseconds. But as this digital net gets cast over regions that are still heavily relying on paper money, we are about to witness one of the largest migrations of wealth and data in history. The infrastructure is ready. The only question now is, as the payment switch expands, who will be first to capture the massive value waiting in India's cash-heavy frontiers? Thank you for joining me for this explainer. I hope this gave you a powerful new lens on both the mechanics and the future of digital finance.